As you take a look back at sort of the decade, what's the biggest theme that sticks out to you?
Yeah, over the last 10 years, we saw a real increased role of the federal government, whether it be the 2009 Recovery Act, the BAB or Build America Bond program, and then also there was a significant amount of money that went into disaster relief in different areas. And one of the things that I'd be concerned about going forward is if the political conflicts that we saw over the last decade are something that we end up seeing, not only in 2020, but in the near and medium term going forward.
You talked a lot about the BAB program that you just mentioned there, and we've also mentioned a huge run-up in taxable supply this year. What's the outlook for the taxable portion of the market?
Yeah, so that's one of the reasons why my volume forecast for 2020 is 450 billion. A significant amount of that is going to be taxable. We really saw an increase in the amount of taxable issuance start in the end of August when rates fell significantly. And I think that as long as rates stay where they are or they potentially even fall, we're going to continue to see a decent amount of taxable issuance. And one of the things that's happening is that there's been an increased amount of interest in municipals, especially on the taxable side, from international buyers and from crossover buyers.
After a 10–11% run up in high yield, does credit have more room to run next year?
Yeah, I think that the things that I'm looking for on credit, really at the state and local government level, I have cautious outlooks on the state sector and the local government sector. Pensions are definitely factoring into that. That's not necessarily a 2020 issue as much as it is more a medium-term issue. But also, like I said, I'm wondering how it is that state and local governments are going to be able to react to the next economic downturn, whenever it is that happens. That's something that I'm watching very closely.